please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, let's shift focus to commodities now. Gnanasekar of CommTrndz Research is with us to tell us what he is strategizing today. Gnanasekar, over to you then. Let's start with Brent crude, or crude rather.
Yep. Essentially, I think it's going to be caught in a broad range because you have production increasing in Russia and US. At the same time, you have problems in Venezuela supporting it. So it's going to be a broad mix, but the prices are going to be in a bearish bias because till the OPEC meeting is over, I don't think the markets are going to bet on the long side. So most likely it's going to be a sell on rallies for a possible target of 4,300 or 250 in the domestic markets, which I think is around 64 or anything below that is going to be a strong support for crude. So in the near term, I think it's a sell on upticks from here for that kind of a target.
Gnanasekar, what else?
We also have sort of a sell in gold and buy in silver. Typically, silver has been underperforming throughout, most of 2017 and 2018. It's just showing signs of picking up. So I think it's going to pick up and we'll see some big momentum happening in silver soon. But gold could come under pressure till the FOMC is over. It typically shows a pattern. Pre-FOMC tends to be under pressure and post that it starts going up. So ideally both gold and silver would rise up post FOMC, but pre-FOMC gold will be subdued. So it's a sell call on gold and buy on silver.
All right, Gnanasekar, thank you very much. Appreciate you joining in with that perspective. Okay, what I'm going to do is just highlight a couple of stocks which are moving around. The Nifty is still up about 50 odd points, so there is no change. But if you can put these stocks up, you have actually, let me just sort this by volume. Yeah, I mean, Avanti feed, if you can pull this up. I mean, this has come a long way from 1,300 levels, which was essentially the lows in the current correction, to close to 2,000 bucks, 1934 now. UBL, United Breweries, the beer company, 4%, 1276. You could look at IB Ventures, Indiabulls Ventures, 468. That's up about 4%. IIFL is up 6%. I mean, that's 741 on IIFL. We will, okay, that's IIFL Holdings. Yeah, that's the one. Then, I mean, look at Coffee Day. So that's 300 odd rupee, 300 plus. That's 5.5% higher. Taj GVK is up about 6%. I'm just, there are many more stocks which are up 10, 15, 20%, but just looking at stuff with volumes. So this is what is coming up on our screens. Dhampur, Dwarikesh, a couple of sugar stocks are up between 5 and 6% each. So that is a pack which is not doing all that badly. Z-Learn is up about 7%. And then you sort of look at other names, but volumes dry up. So I think we should just stick to this list with what is doing very, very well at this point in time. So 50 odd points on the Nifty and broader markets. There's a fair bit happening. It's time now for our segment, Hunting for Value. Abhishek Kothari is standing by, and he's got a stock which is put under the spotlight. It's in a virtual bloodbath through the course of the year. Abhishek, what's on your radar?
Well, on my list is PNB. The stock has fallen about 49% in 2018 and it is down by 62% from its 52-week high that was made on 26th October 2017. What led to this fall was the PNB related, Nirav Modi related scam of $2 billion, which led to the worst ever quarterly performance by PNB Bank, resulting in the highest ever quarterly loss owing to the fact that their gross NPA increased massively. So, along with worst asset quality, the capitalization also came to 5.6, 5.7% in terms of the common equity tier 1 ratio. So this prompted many to think that the bank could go under the PCA, that is prompt corrective action framework of RBI. So what are the triggers for reversal? The government is confident that PNB can generate about 12 to 13,000 crore in H1 FY19, and this will be done through various methodologies such as sale of non-core assets, subsidiary stake, NPA resolution. So let's just highlight a few. PNB released on Friday to exchanges that they are looking to bring down their stake or monetize their stake in PNB Housing, ICRA, CRISIL and BSE. They are also looking at deal to sell their Bikaji Kama headquarters for 1300 crores, which are at its final stages, and resolution in stress assets like Bhushan Steel and etc. For example, Bhushan Steel can release 900 crore into the balance sheet of PNB, which will lead to higher profitability. So resolution in stress assets will also lead to their profitability increasing. Most of the stress has been recognized in the P&L of PNB, and therefore the incremental stress in the balance sheet of PNB is the lowest that I've seen over the last 4 to 5 years. The mixed review coming in from brokerages. Morgan Stanley maintains a buy recommendation with a target price of 125. Kotak Securities has an ad rating with a target price of 90. Interestingly, Kotak Securities mentions that expects strong recovery and upgrades over the next few quarters, and medium-term outlook is less uncertain. While Nomura has a reduced rating with a target price of 75. So if you look at the peer comparison, if you take the top 5 PSU banks average price to book value, PNB is trading at a discount of 14% based on FY19 valuations and about 12% on an FY20 valuation. Standard disclaimer, this is not a stock recommendation but just an analysis of where PNB stands as of now in terms of what led to the fall and what can revive.
Okay, all right, Abhishek, thanks very much for that. So important to mention, this is not a recommendation by CNBC TV 18. PNB is the stock in focus. But let's get talking about the technicals of the market. We have Ashwini Gujral with us. Well, Ashwini, morning. You've been quite optimistic on pharmaceutical stocks. I was looking at your tweet earlier in the day where you are saying that, maybe it's time to buy pharmaceutical stocks, and the fact that it's probably bottomed out at current levels?
Well, it always helps when your kids start to do well, so probably that makes you happier. But my sense why I would say they have bottomed out, because incremental bad news is not making them hit fresh lows. Whenever that starts to happen, price-wise stocks bottom out. Now, when good news will come in and when they will turn around, that probably time will tell. But as of today, they are holding their lows whenever they are hit by bad news. So that way, it's in some sort of value zone from where your risk reward is extremely favorable. And if really things start to turn from current levels, they can easily double.
Oh, double. Any specific recommendations in terms of stocks?
See, the entire sector has been underwater. So you start with the large stocks, Sun Pharma, Spark, Natco Pharma. Ajanta Pharma has had a vertical fall. It used to be a 2,500 rupees stock, today it's at 1,100. So even a 50% retracement is an 80% rally. Oro Pharma. So across the board, Pharma is where IT was 1 year back. The differentiation will start after they double. But for the moment, I think this is the best space where risk is low and return could be high.
Okay. Now, any recommendations in general about what the Nifty strategy would be as well as other stocks?
Well, for the day, Nifty is higher, but we need some sort of, large cap participation if we have to take, resistances out. We are hanging around this 10,820 zone, which was Thursday's high. To go further, you need, some Reliance or HDFC Bank to take leadership. But the good news is that the broader market seems to be healing. And because it's healing, the moment you have large caps coming back, the market will start to look much better. So having said that, for the moment, Ajanta Pharma is a buy with a stop of 990, target of 1060. Edelweiss is a buy with a stop of 323, target of 338. Ultratech is a buy with a stop of 3700, target of 3850. And all of these stocks which are at new highs like Avenue Supermart, Bajaj Finance, Finserv, etc., they continue to make fresh highs, Jubilant. So those are the kind of stocks that people should have as a core of their portfolio. And then around those stocks, you should build up these mid-cap stocks which are kind of turning around.
Okay, we've got some questions coming your way, Ashwini. So Prabir has 50 shares of CET. He's paid 1475 rupees each. Wants to know whether to hold or sell.
Well, it's a cyclical and probably at the lower end of its band. Keep a 1300 type of stop, maybe add some more here, and we could see a rally back to about 200-day moving average, 1650, 1700, those sort of levels.
Okay, the next one is Bharti. She has 50 shares of Canfin Homes at 527. Ashwini wants to know long-term view.
See, last year was good for NBFCs. This year, rates are going up. So only the best NBFCs maybe will move higher. So, if you move on to say a Bajaj Finance or Finserv, they are at new highs. The selling is lower there. I think if you want to recover something, you are much better off moving to the top-rated NBFCs rather than these Canfin Homes and the second rung.
All right, thanks very much, Ashwini. Appreciate you joining in. Good speaking with you on 11:30. We, of course, will speak with you in about an hour's time. We take a very quick break here with news that, markets are absolutely stable, 50 points still there. Anish Damania of IDFC Securities will tell us what he's making of things. That conversation on market fundamentals follows. Okay, welcome back. The market's up 50, the mid-cap index is up 140, Bank Nifty is up about 95 odd points. Anish Damania of IDFC Securities is now joining in to talk about what he's making of things. Anish, thanks very much. Good morning. Your thoughts on Friday's bank announcement? Some have called it that, some have said that the bad bank proposal is back on the table. Others are not so convinced. Where are you on the matter?
Yeah, so one of the things is that we have already seen that there has been a huge write-downs in most of the banks, public sector banks, and obviously RBI has issued some problems with, let's say, Allahabad Bank or Dena Bank, and today's newspaper talks about six more public sector banks to face that kind of scrutiny. So it clearly means that there are certain reservations where you might see the mergers probably happening a little earlier than what would have been otherwise planned, and merger is coming by way of necessity rather than a design. So this probably is something to do with that. I don't know what timeline it would be, how it would be carried out, even the bad bank proposal, who's going to fund it, or what kind of timeline will be there. So I'm leaving it at that, and so is our analyst.
Okay. Have you looked at DMart or Avenue Supermarts? It's touched the 1 lakh crore club in terms of market cap. What's your sense in terms of when valuations become too much?
Well, what I have seen is that when valuations become too much and if growth disappoints, stocks underperform. But so far, growth has not disappointed there. We don't cover Avenue Supermarket, so very difficult for me to comment on where the earnings are headed for that company and how the market cap is expected to behave. But given that it's a very low floating stock scenario, a high valuation is basically because of scarcity in the stock.
So no, absolutely, fair enough, Anish. But it's got under $2 billion in sales, $15 billion odd in market capitalization. That's 6 or 7 times sales. Does it look? We understand the technical factors that there is low float, etc. But given those kind of valuations, what is it? Does it look enticing to you? Would you stay away? I mean, what would you, if a client came to you and said, "Well, what should I do?" What would you tell the client?
So Prashant,
yeah,
Look, one thing is very clear, at least on air, I'm not going to talk about stocks which we don't cover, and certainly not opine on them. So this is one stock which we don't cover, unfortunately, and I'm not going to opine on it.
Okay. You know, Anish, the big mover from Friday had to be Sun Pharma after they received that VAI or voluntary action indicated status for their Halol facility. How much more do you think is left to go for Sun from current levels?
So what we feel is that this part of the Halol facility probably is priced in at this point of time, and the critical area to look at in case of Sun Pharma is more about its specialty chemicals, specialty pharma, and how they scale up on that. That is something which we'll have to watch out for. Otherwise, this probably is now, with this price increase, has been priced in into the stock.
The entire sector, Anish, many are saying that, well, it's starting to bottom out, maybe it already has. What's your view there?
Yeah, so we feel that you know, one of the things which was plaguing this industry has been the realizations and the sharp drop in values of sale prices in the generics which is sell in the global markets. I think that still continues, though you might argue that it has happened. The one big tranche has already happened. The second could be very, very slow, and to that extent newer approvals could come in. The second issue was about FDA being more stringent on Indian companies in terms of the approval processes of the plants. But I think over the last 2-3 years, I think we are fairly known that this is what is the case, and most of the big companies have kind of put processes in place to see that they become more and more compliant. So nowadays you probably hear about a larger number of approvals coming in than some bad inspection reports. So we are behind that. The third point was on account of depreciation of the appreciation of the currency over the last 2 years also had its impact. Now we are seeing a depreciating bias of the rupee. So probably we are seeing some amount of bottoming out, but how long will this continue is something which we need to watch out for. There could be company-specific opportunities which could come up and which do keep coming up all the time.
Okay. All right, Anish. Thanks very much for joining in with your fundamental view on the markets. We need to take a break now, but up next, we'll be discussing the global economy in the current backdrop of geopolitical issues. Prashant had a conversation with David Mann and Eric Robertson of Stancy, so we'll be getting you that exclusive conversation on the other side. Stay tuned.
Okay, welcome back. You've got the market up 55. So, I mean, at 11, we have, I think had about a 45-odd point gain in the Nifty. We've got about 55 now. I mean, the Sensex is up 151 odd points, 35,595, looking good. Mid-cap index doing even better, 0.75% gain on the mid-cap index. You know, when we talk about global trade, global macros, there is one thing which is dominating news flow and news wires, that is President Trump and the news that he makes everywhere he goes. And over the weekend, he made a fair bit of news with the G7 summit. Remember, the G7 summit put out a statement with the implicit buy-in of the US. And then Mr. Trump, while on his way over to Singapore, essentially trashed that joint statement which the G7 group had put out. I spoke with the top team at Standard Chartered Bank, David Mann, who is a global chief economist at Stancy, and Eric Robertson, who is the head of global macro strategy at the bank. And this is what they had to say about what happened with G7 means for sort of trading systems and multilateral institutions around the world, and how much importance we should pay to it. Listen to it.
It's been the case for a number of years that the more relevant entity is really the G20. Even though it contains arguably too many economies, it does at least include the ones that are more relevant in terms of accounting for a large share of global growth. These days, Asia accounts for about 60% of world growth if you use PPP exchange rates, and in the G6+1, they're not in there. So I think the amount of attention that's given to communiques coming from the G7 over the years has been going down, certainly compared to 10 or 20 years ago. So in that way, I don't think you'll get a big market reaction. Also, I don't think they should be too shocked that we have seen this sort of more animosity created by some of the tensions through what usually are usually never the case with these allies.
But expectations were already running pretty low, right? I mean, that they will be, to begin with, a joint statement in the first place. But, well, we got that. And then, I mean, we got Mr. Trump's tweets.
That's right, and it's therefore no one's really too shocked that whatever the statement ended up being was one that did not get the full support of the largest or most significant member, because we are in a different world in terms of the way that all of these norms work compared to what we've been used to. That's right.
Eric, will this roil forex markets more? I mean, emerging market currencies have had it pretty bad this year.
No, I don't think so. And you're correct. It's been a volatile year for emerging markets, but I don't think the tweets from President Trump over the weekend will necessarily exacerbate that. We've gotten used to an environment in the markets where, you know, Trump has made it very clear that he wants to operate, whether it's with trade or other treaties, other negotiations, on a country-by-country basis. And these large multilateral organizations, he believes, are inefficient. So I think this is really more of the same. I think we've got some bigger issues to think about for emerging markets, whether it's the increase in U.S. interest rates or the strength of the dollar recently, oil prices, etc. And obviously we have a rather important summit in Singapore this week.
David, but it's very clear, I mean, as both of you also agree, that he's made it clear he wants to deal with issues country by country and not on these big forums, right? So what does that really mean? I mean, the existing order, as many have put it, is sort of up for renegotiation completely, overhaul?
Well, we've already been going down that route of just piecing together like a giant spaghetti mess, all of the different individual bilateral deals to try and then figure out, can we then turn that into something at least regional and then link the regions together. The WTO process, for example, has been stalled for a lot longer than President Trump has been in office, and protectionism as a trend, that's something that was well underway even 10 years ago. We've been counting the number of protectionist measures taken by various countries over the last 10 years, and actually the US has been implementing more measures than anybody else. So that tend towards being a little bit less into the let's just use up all the low-hanging fruit, it's already gone, has already been gone for quite some time. I think what we're focused on now is, can you at least resuscitate some of those regional deals? And I would say the jury is still out on that, but expectations, certainly what does it matter for the markets at this stage, are very, very low. I think the thing that the markets are more worried about is, do you end up somehow in some sort of negative trade war spiral? And on that front, there are signs that are sinister, but also some signs from what we look at that actually, even on the US-China relationship, that they would like to get a win-win situation rather than spiral downwards.
What is the number one issue for markets? I mean, forex markets and other markets, according to you, right now?
I think there's two. The first of which is the Federal Reserve and how far they will lift interest rates.
Sure.
The increase in U.S. interest rates since, let's call it September of last year, has been around 100 basis points in 10-year yields, and more than that at the front end of the curve. So we have seen a significant flattening of the U.S. yield curve. I think for emerging markets more specifically, the increase in the dollar and the increase in oil prices at the same time means that in local currency terms, oil prices have gone up dramatically, and the potential spillover to inflation has now forced some of the central banks in Asia and other emerging markets to raise interest rates to defend their currencies. And I think that's something the markets have struggled with.
Fair enough. But if he were to, as David mentioned, get a trade war spiral, right? I mean, the common view right now is that Mr. Trump is a smart man, he's been a businessman, this is all negotiation, and his opening sort of gambit is pretty tough, and then he kind of sort of waters down, he backtracks, etc. What if other countries were to do the same, and then if it spirals out of control in that sense? I mean, would that be a big worry?
It is a concern. For the moment, I think our view is that it remains what we would call a fat tail or a black swan event. I think, as David mentioned, most of the countries involved in these negotiations have taken a very interesting approach, which is to focus on industries or sectors in terms of their retaliation measures, which may garner large headlines, but in terms of the overall economic impact would still be relatively small. Now, if we can stay within that construct where there is a tit for tat, such that both leaders or countries can go back to their voters and constituents and say, we have achieved this victory in our trade negotiations, I think we can avoid that fat tail event. But
Okay, all right. So we're going to get you more of that conversation through the day. As of now, we need to take a break. More on the markets once we're back. Stay tuned. Back. Well, for the mid-cap index, up around 0.7%. So really, all of the action seems to be there today. We have PC Jewelers, for example, which is back at 148 rupees. So that stock is up around 8% this time. Usha Martin is up around 7%. In fact, that stock has had a great month. It's almost up around 30% just in the month of June. And a couple of other stocks which stand out seem to be a couple of these sugar counters. So they're seeing some amount of buying. Dwarakesh Sugar is up 7.5%. Dhampur is up around 7%. And PSU banks are seeing some amount of momentum. Corporation Bank, case in point, up 6% at this point. Well, with that, it's also a wrap on Trading Hours. Stay tuned. Halftime report just after a short break.